Hey guys, Mike here. So, oh boy, what did we talk about yesterday? Buckle up for another volatile day, and what did we get? Oh yes, another volatile day. The one thing I'll say is I just got done with a members video talking to them about this. Did you find it strange? Was I the only one that found it strange? That yields were down, dollar was down, and oil was down. And yet the market did what this morning? Sold off heavy, right? Ended up finally bouncing up and recovering. We'll talk about that. To somewhat finish red. Small caps actually finished green, believe it or not. But again, huge swings. I found that to be very interesting. Of course, going into setup what? Weekly options expiration tomorrow in the first week of October in the books. But of course, we did have data this morning, and we will talk about tomorrow's data because there's going to be huge data coming out tomorrow with a bunch of different setups. But I think we're going to get some breaks on certain stocks. For sure. And I'm also going to have a quiz for you in this video, real quick question to see who's been listening and who has not been listening. But you can see this is not what the Fed wants to see when it comes to continuous jobless claims, right? I mean, they continue to go the opposite direction of what they want. They're coming in below expectations or just right at it. But again, you know, when you look back over, you can see that's how they want it. They want it coming up because they want you guys to lose your jobs. That way the economy can slow down. They can tame inflation. That's how it works. Now, like I said, I'll continue to put this chart in here. This is the MBA mortgage purchases chart, just so we can all get a good chuckle and see how far this thing can drop. Now we are back to 1995 levels. Again, why? Because you keep seeing new higher rates for 30-year mortgages and people just can't afford them and are scared to death to buy them right now in a slowing economy. Now that leads us to this. We're talking about treasuries and stuff and how China has been selling their U.S. treasuries, which of course puts pressure on the prices of the treasuries and keeps helping them drive it down because they're one of the biggest foreign holders of our debt. Now you look at this, you may say, well, wait a minute, Mike, right here from 2012 all the way to 2021, man, they were selling like crazy, right? And we didn't hear anything about it. We didn't really feel anything. The bond market wasn't freaking out or anything like that. So why is that? That's the question I have for you. So pause the video. If you've been listening to me, you're going to know this answer. How come when they were selling bonds like this, these treasuries, the bond market didn't feel it? We didn't feel it. Nobody thought anything about it. And if you've been with me long enough, you know why. Because this is when the Fed became the biggest buyer of the bonds. They took over the bond market along with the stock market and the real estate market. Just look at that increase, right? Almost 1.5 times what they were buying, and then look at that hot mess right there. That was during the 2020 shutdown. Look at how much they increased. They bought up everything that moved right there. Okay, now let's look at this one. Here's the difference of what's going on. All of a sudden, you're seeing a huge steepening from 2022 till today. They're selling them like hotcakes, right? These treasuries. And of course, why is the bond market feeling this right here? Can anybody tell me in the comments? Why is the bond market all of a sudden going, what's going on? Because don't forget, Japan, we believe, is also doing this as well. And the answer is pretty easy here. So let's see if anybody gets it. And guys, before we continue, please hit that like button. It helps people find the video. I really appreciate that. And if you like this kind of content, think about hitting that subscribe button down at the bottom. Because the Fed is doing what? They're rolling off the balance sheet. They aren't the buyer anymore. Remember we talked about this like a year and a half ago when we talked about imagine owning a company and all of a sudden your biggest buyer, who is a huge buyer, right, of your goods or services, calls you up and says, I'm out. What would happen to your business? Not good. Okay, you would be feeling a lot of hurt and pain, right? This is the bond market's feeling. And so this is what we had to see, like what was going to happen. And so we'll continue to see they stick to their guns on rolling the balance sheet off. It's the lowest it's been since like, I think maybe March of 2021 or something. So, woo, you know, but again, they may continue to roll it off, but they won't make a dent. You saw, and the reason why, you saw the spike up, right, in 2020. I mean, come on. That's ridiculous. And why is the real estate market feeling what they're feeling? Because they were the biggest buyers of mortgage-backed securities as well during that time, which is why people were like, wow, my properties keep going up and mortgage rates still stay low. That's why. That's what that was doing. So a lot of manipulation, like the gentleman said, holding a beach ball underwater, boom! When it finally escapes and pops up, you start to see some things, right? Now, one thing we better hope doesn't keep happening, again, is the dollar, right? If this continues to rage up. Because supposedly now you're seeing like speculative traders turn bullish on the dollar and leverage funds up long bets on US dollar to most since June. And you can see that's what they did last year during 2022 when it was revving up. And so it looks like they're just starting to go long. So again, a dollar is traded like anything else. Let's see if they're able to manipulate this thing up, which of course isn't good for other countries, which means they will probably most likely intervene, you would think. Now, two things that could absolutely affect how stocks go over just the next 2 to 4 weeks versus into fourth quarter, and the exact same thing, and it is stock buybacks. All right, for the fourth quarter, you got companies out there, especially the big mega caps, with billions sitting on the sidelines because they've actually held the money back because stock buybacks have actually gone down or slowed over the first 2 quarters. And so we get to see what they do in the fourth quarter. But right now, though, you're seeing what? The blackout window for buybacks. So a lot of them should be entering about, it says 90% of them. Will enter, assuming over the next 4 to 6 weeks this is going to take place because we have earnings, real earnings ramping up on the 13th here. So let's see how that's going to affect things when these companies can't come in and rescue their own stocks during this earnings season. And that's why we could stay, chop fest central here until the 13th. We'll have to see, of course. Usually it's the banks that report first. But again, they've been a hot mess, right? And so, again, though, this is going to be an interesting earnings season because of what's been happening. The opposite of what was happening in Q4, Q1, with the dollar raging, with oil going up, right? All these different things. So it's really not about so much what they're going to report for third quarter. It's what they're saying for fourth quarter, right? And so input should be higher for them, which is not good. A lot when they're converting those foreign sales into US dollars, that should not be good. And so let's just pay attention to that right there and see how the market accepts this. Now, looking at what happened this morning, you can see even in the Discord, I was telling the members here, this was at 10:07. I was like, wow, on the Q, sure would be nice to fill that RTH, which is regular trading hours gap down there below. And it's pretty far. I thought, man, if we sell off there, I'm going to be pretty surprised. But we'd already started to roll over starting out the day. And then, of course, within 28 minutes I believe it was, there we were. And we filled that gap. And then that's when we went, bam, 10:15. Took off, right? Complete reversal. There's the volatility for you, right? And, the S&P, what we got to look at here is, again, are we accumulating here? Does it want another low? That's what we got to figure out. These are on smaller time frames. There's a 30-minute chart. There's that year-to-date anchor VWAP. There's the 200 moving average, right? Right at it. And so, it feels like the market wants to ramp up maybe for just one more low. I mean, let me know what you think in the comments. But again, it is accumulating here. You're seeing these dip buyers continue to roll in every time we take a dip down. Another thing to look at here is I always like to look for W patterns, inverse head and shoulders when you look at this stuff. Again, lower time frame. You saw last time we had a 9% sell-off in February into March. Got this pattern, boom, took off, right? At a smaller level, is this going to end up being, a W pattern right here that plays out and we end up taking off? Another way you could probably look at this is this going to be an inverse head and shoulders, right, on the smaller time frame? When you look at that, I mean, is that the left shoulder? Is that going to end up being a head right there? Is it going to end up moving up, filling this gap, hitting that what was support, now will be a resistance line, and then coming back down to fill the right shoulder out and then taking off? I mean, is that what we're going to get? Which would put us close to earnings, this being an hourly chart and everything. And so let me know what you think in the comments and stuff. I just kind of try to look for stuff like that when I'm looking at these charts. Now, Apple, again, unbelievable, I swear. How many days? 4 days green now? And even when we were selling off, like this morning, Apple was staying strong, right? They just won't let this stock go down. Once it got in that gap, got near that 200, maybe that was the bounce for it. Maybe not, right? When you look down, you got a bullish MACD cross sitting there on the daily. I know it's below the 0. The RSI is getting close to going over the 50, which we all know is bullish. And so, again, it's just treated different than any other stock. And I'm telling you, I can't imagine the market going down and setting a new low without Apple coming down with it, okay? And when you look over here, you can call this a descending wedge if you want to, declining wedge, whatever you want to call it. If that's the case, we're bouncing, right? And we would be moving up here to fill this gap. That's what would happen. So let's just see if this plays out or not. Then you got Meta. When you don't think this thing can wedge anymore, I thought for sure we'd get a breakout today. Look at this thing. I mean, I'm talking about, I was literally playing this with options today, and I'm talking about to the penny. I have not moved these lines. This thing is just wedging. Look at this thing. And the reason why I know, because I got in calls right there thinking we're going to bounce. And so I sat there for over an hour and a half. Hour and a half watching theta take effect on my calls. Eventually got out green, but it was like, man, is this thing going to move? But to the penny. it bounced, right? And then it gets up to the top. What happens? To the penny, it rejects back down. So, I mean, it can't wedge much farther. Again, put in the comments, what do you think? We're going up, we're going down, we're going to 315, or we're going to 290? Like, which one's coming first? You got to think it's going to have to be an explosive move. But again, it just keeps, it's a soap opera. Remember, we got to have a soap opera, a cliffhanger for the day. And there we are, just sitting there, just wedging and wedging. If we wedge tomorrow and don't break out of this thing, I mean, I'll obviously get a good chuckle, of course. Because when you look out on the weekly in this thing, you think, wow, this thing's got to fall, right? But again, it's thin air up above because, it's that to the left right there, as you see in August. I mean, that's the yearly high, or the 52-week high, which is not far from where it is now. So, again, we'll see what happens to Meta on that one. And that leads us to Tesla. This was another strong one today. You see us getting that bullish MACD cross down there, which is above its zero line, which is bullish, of course. We'll see if this pattern plays out or not. You can see right there at the end of the day, you're like, a smaller time frame. Is it going to come down, setting lower and lower or not? Are we going to continue to rev up? I would absolutely love to stay in this pattern right here as it moves up towards the other trend line right here, as we can see. And I mean, we'll see if it plays out or not. I mean, look at those volume candles down there. Again, this is the hourly, right? And so you can just see every dip is being bought up right now. And so people are super bullish. A lot of calls coming in on this one. And it's really going against what the market's doing in a way, as you can see with these moves and stuff. So we'll see if we keep moving up to around that 268, 269 area tomorrow or not. And again, it's more low volume on Fridays. And so Tesla would definitely benefit if those calls start rolling in. Now, AMD made a really good recovery. It was down 3% right out of the gates. Thought I was going to be heading back down towards that bottom trend line, but dip buyers came in, and this is something to pay very close attention to. And again, if we put like the year-to-date anchored VWAP on there, you can sit there and see that right there, plus the 200, like it didn't touch or anything, but it has that support below, continues to bounce off of it and everything. But one thing to watch out for is the dip buyers. I mean, you're getting these V-shaped recoveries, especially in these semis, just like this right here. It fell down 3%, immediately, boom. They come in and buy. The day before that, what did you see yesterday? Same thing. Falls down, you're thinking, oh, it's going to be horrible. Here come the dip buyers, right? Come plowing in. And so, again, let's keep an eye on that. Just use what you see. If you're going to see a reversal, all the dips start getting bought up. All the dips start getting bought up. And that's what's happening right now with a lot of these stocks. And you're seeing that in the video, too. I mean, this one right here, when it goes against gravity, basically, right? It's setting up against that 50, maybe getting ready to take that 50. Bullish MACD cross. RSI is still over the 50. Which is bullish on the daily right here. And when we break it down to the lower time frames, you can see what I'm talking about. Like any little weakness this thing shows, they come in, boom, and just run it back up, right? And so even with the market being weak, this one has been strong since the, 25th? Still going up, right? And so when you look at this right here, I'm going to set a resistance line right there, because if it can break over this, I think you've definitely done the short-term reversal here. And we're going to continue to head higher in NVIDIA. So if we get above that, which is around 450, so if you break that, I mean, that's going to be super bullish with a gap right above that to fill. So, don't be surprised if it keeps moving. Now, the weakest has got to be Netflix. And again, is this going to be the bellwether? This is going to be the signal that the market's going to turn? Because if we look, it's been weak as can be, and it's sitting right on the 200. That's what saved it today, was the 200 moving average. We know how stocks love to bounce off the 200 moving average. I believe this has been down like 24% since July. So it's just been getting hammered. If we pull up the MACD, you can see it's starting to get a bullish cross. So this could be a swing up here. Again, it's one of the big mega caps. Doesn't have as big as weighting as a lot of them and stuff. Again, got a lot of gaps to fill up above it. Nice resistance, pretty far up. I mean, 25% move up. So this is a big move down for it. Usually stocks like this like to bounce to 200. So let's see what happens on this one. And it could be a signal to the market if it does bounce and continue to move up and change its trend. Now, Baba gets no lovey-lovey, okay? Baba's a hot mess, right? It's sitting down at the bottom of this descending wedge right here. It's just been a mess. I mean, I don't care what's coming out of China. Baba's getting hurt. And a lot of Chinese stocks are actually up today. Baba was not. You can see those candles there. I mean, not a whole lot of volume or anything. So maybe it finally gets just a technical bounce to start heading back up to 88. We'll have to see. And that leads us into the data I told you about, which is a boatload. And you're going to have before the bell average hourly earnings month over month, year over year, weekly hours, manufacturing payrolls, non-farm payroll, which they're expecting a big decrease in. participation rate, and then more importantly, the unemployment rate. This is what we want to look at here. They're actually expecting the unemployment rate to actually go down. And all that will be out before the bell opens. So we'll see how the market digests it an hour before open. That is out at 8:30. Of course, for those who are members, you'll get the morning news brief after 8:30. That's why I wait till after 8:30. People say, can you get it out early? I'm like, I'm waiting for news because as we can see, news can shift market, especially this kind of data, right? So there's a lot of it's about the consumer. So you'll get it. You'll be up to date. Maybe see where the market's heading and stuff. And so, we'll see where it goes. Let me know what your prediction is and everything. Anyway, guys, hope you got something out of it. Hit that like and subscribe button. I really appreciate it. Thanks for sharing these videos. Appreciate all you guys are signing up for the membership and stuff. Let me know if I can do anything for you. Feel free to try it out in the bottom. $7.99. You get a 7-day free trial and stuff. So look forward to seeing you guys in there. And the rest of you, I'll see tomorrow. We'll get to see what? Probably another volatile day. Have a good one, guys.